Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we will understand and learn a little bit about NFOs. Now, a lot of people have DM'd me and asked me, can you make a video specifically on NFOs? And we'll understand today what is an NFO, right, which is a new fund offering, how to identify good NFOs today, and we'll look at some of the NFOs that are currently there in the market, and I'll show you how to do everything today in this very, very quick episode. Okay, so stay tuned. Let's deep dive into the entire meat of the presentation. Now, NFO is basically called a new fund offering because this is basically the first time the fund is coming out and opening its subscription to everyone that is there in the market, right? This is the first time it's actually doing this. Now, whenever a new scheme is launched for the first time, this is launched by the asset management company that is called NFO, right? Now, usually when this happens, the first time people start investing in this, and then the NAV is basically set at a predetermined value, and then the NAV slowly goes up. NAV is what? Net asset value, right? Now, where do you look at all of these new fund offerings? So all the time in the mutual fund industry, and there are so many mutual funds, there are so many AMCs, new and different types of funds keep coming out. Some of them are very unique, some of them are just normal funds, right? And these are coming out through AMCs. So let me just zoom in for you so you can see it, right? Now, look at this. The new fund offerings that are currently there right now, you can see there's a new mid-cap fund, there's a cycle fund, there's a large cap fund from White Oak. So you can see that there are different types of fund, but all of these funds are slightly regular, right? Then if you look at, if I go down and I show you all the upcoming IPOs, or sorry, upcoming NFOs here, you will see that there are different NFOs here. There's multi-cap, small cap, index fund, there's a new index fund coming, ETF, again another index fund, multi-asset hybrid allocation, and ELSs, right? So these are the different type of NFOs that are currently there in the market right now. So let's take an example of something that I found slightly unique. Okay, we'll check out Samco ELSS Tax Saver Fund, right? Now, we all know what ELSS is, right? ELSS comes under ATC. So whenever you invest in an ELSS fund, you basically get tax benefits, but there is a lock-in for 3 years, right? Now, why do I say that this is slightly, slightly unique is because I read an article on LiveMint recently and I've opened it up for you. So basically, Samco MF launches an ELSS tax saver fund primarily to invest in mid-cap and small-cap companies. Now, you'll be like, Shashank, what is so unique about this? They're investing in mid-cap and small-cap companies. But what is unique, I'll tell you, basically 70% of all the ELSS funds that are currently there in the market invest heavily into large cap companies, right? Now, if I show you an example, if I just go to moneycontrol.com right now, click on ELSS and do it according to AUM, you'll see the top three guys, Axis, Aditya and Mirai, right? So if I open Aditya over here, you will see if I go down, most of the allocation is large cap, which is 54%, and then mid cap and small cap is the next half, right? If I look at Mirai asset over here, same thing, 58% in large cap, 11 and 7% in small cap and mid cap, and other is 22. If I look at Axis Bank, which is now the highest in AUM, again it has 61% allocation in large cap. Now obviously when there is a massive allocation in large cap, the returns will also be according to the large cap investments, right? So when I saw this article, when I was reading this article quite recently, it said basically that Samco is investing in mid cap and small cap companies, and when somebody invests in mid cap and small cap companies, what usually happens is that the returns now start going up, which is a risk adjusted returns, right? So if you see that when you invest in high quality mid cap and small cap companies, the risk adjusted returns over a long period of time keeps going up. But again, this is an ELSS fund, so there is a 3-year mandatory lock-in period right now, right? So if you look at all the funds that are there, by the way, there's no rule that all these other funds over here should not invest in mid and small. Okay, they can do whatever asset allocation they want, but most of them have just done large cap based investing. So that is why I keep tracking all the new NFOs that are coming, because when you look at new NFOs in the market, sometimes something unique comes into the picture, right? So that is why the advantage comes into the picture. Now, what else can we observe here, right? Now, because they have mid-cap and large-cap companies, I can also assume that the risk is obviously slightly higher, but the rewards over a long period of time, over 5 years, the CAGR will also be significantly higher. So if the CAGR starts becoming significantly higher, obviously that becomes a good investment asset class for me. Basically, that is what it is, right? Now, looking at, okay, let me come back here and see what the fund, now how to look at this fund. So basically, this is in the ELSS category, which is equity linked savings scheme category, right? Open, so it'll open very soon. I think it's opening on November 15th, which is in the next few days, November 15th, and it's open for another 1 month, which is December 16th, and they have a 500 rupee minimum investment, right, which is again very low for other people to invest in, and the fund manager is Nirali Bansali. So it is again very important to look at the fund manager and the history of the fund manager as well. So again, the fund objective is to generate long-term capital appreciation through investment made predominantly in equity and equity related instruments. So that is again Not bad at all, right? So understand what I'm trying to show you here is, if you look at the entire market right now, entire ELSS fund market right now, majority of them are invested in large cap. Now this has come with a unique twist of investing with mid cap and small cap higher allocation. That means the returns of risk adjusted returns might do really well going forward, right? Again, I would suggest all of you guys to obviously read the scheme related documents, check out whether it is okay for you guys with respect to risk, and then start investing in something like this. So this is opening very soon. And where do you see all this? You can see it in your broking account. So whatever broking account you have, if you go find NFO over there, you will see all of that here, right? So if I showed you, if you are in ICICI Direct, obviously you can see it here, as I shown you just before we started it, that we saw a lot of new upcoming NFOs over here. So this is one of them, which is opening on 15. Now that is one part. Okay, now moving on to the next part, right, which is how do these NFOs work? So let me show you something, right? If I go to the NFOs that are currently there in the market right now, there are so many different NFOs that are currently there. Let me just take one NFO for example, just to read and understand how it works, right? As I said, even when we saw Samco, it had similar things. It has similar things over here, where the NAV is 10, start date, end date, everything is here. Exit load not there, stamp duty is there, tax implication, minimum investment here is 5,000, whereas this was 500. So you need to start analyzing different things, and you have to also look at the fund houses when it comes to investing in NFOs and trying to understand new NFOs. Now there are some important things to look at whether an NFO is good or NFO might be bad. Again, it's not launched yet, it is going to launch. It's as similar to your IPO, right? So before that happens, we need to look at some parameters. What are the parameters? First, you need to look at the fund house reputation, right? Let me come back to this. Now, the most important thing when you invest in NFOs, first thing, look at the fund house. Has the fund house been there for a very long period of time? Have the other funds in the same AMC or in the same fund house given good returns over a long period of time? If that has given good returns over a long period of time, then I would say again that is a very good NFO to take a bet on, right? Second, we look at the fund objectives. Like I just showed you, what are the fund objective? Basically, invest in long-term capital to generate long-term capital to invest in equity and other equity instruments, right? Whereas in Samco, it's in mid cap and small cap. Whereas say in Axis Bank, it is Axis ELSS is basically large cap and mid cap, right? So that is how it is. Now returns. Now returns is something you cannot foresee in an NFO, right? A lot of people say, Shashank, how much it might give? You have no idea, right? That is why you're entering at an IPO level or an NFO level, where you have no idea what the returns might be, but you have to understand the fund house reputation, who's the fund manager, do a lot of research on the fund manager, and then take a call whether you can invest or not. And then depending on that, you can keep tracking your returns over a monthly period, okay? Another very important thing when you look at while investing in NFOs is the risk factor. Now, what is risk factor, right? Now, every mutual fund document or every mutual fund or NFO that comes out has something called as SID, which is a scheme related document, right? Over there, they actually show you the entire risk appetite of this entire mutual fund. Why do they do that? So if a company is heavily invested into equity, the risk is usually higher. If the company is heavily invested into debt, then the risk is slightly lower, right? Because it's fixed instrument bonds. But if it's a hybrid, it might be not very risky, but slightly risky. So it's very important to look at that, and depending on your age group, depending on your risk appetite, depending on how your financials are, you can take bets on all of this, right? Next, a very important thing to look at, two things. One is the minimum investment amount. Like as I said, we showed you in one of it was 500 rupees in Samco, and in the other one at JM, it was I think 5,000 rupees. So again, depending on how you can invest, how you can start investing, you can choose the minimum amount. Sometimes the minimum amount is even higher. So then obviously we cannot invest very easily if it's very high. Another thing I think we should also look at is the expense ratios. Now, expense ratio is very important when it comes. What is expense ratio? Basically, whenever you invest in a mutual fund, obviously they're doing all the work for you. They have a team, they have a manager who's handling everything for you. So obviously they'll take some amount of money from that, right? So expense ratio is that amount of money which they take from everyone when they generate returns for a lot of people. So that is expense ratio. And finally, we look at the structure of the scheme. Some schemes are only India dependent. They'll invest in Indian companies. Great. There are some schemes that invest abroad, right? They will invest in US, they might invest in China, they will invest in 100 other places. So all of these small issues might happen. So you need to look at the structure of the scheme as well. And once you understand everything, you understand the structure of the scheme, you understand the fund house reputation, then you can start going and trying to invest in these different types of NFOs, right? Now, the reason why I did this episode was only to make you understand what are the different types of NFOs that are coming in the market. So whenever I see something exciting, I come out and do a quick video on it, right? To understand, I think today what I saw was the Samco ELSS. So I'm definitely going to track it very closely, mainly because if it is giving me really good returns, and I do a lot of ELSS investments every year up to 1.5 lakhs, mainly because it gives me a massive ATC benefit. So if the returns of this fund starts doing really well, then I will move my allocation from my current ELSS axis and move it back to Samco, just to get a better CAGR potential, which is compounded annual growth rate over a long period of time, right? And obviously I get out of ATC 1.5 lakhs ka benefit also. So I hope this episode was interesting. I hope you guys like this episode. Whenever I look at something different in the market, I'll come out and make a quick video for it. So I hope you guys enjoyed this. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.